Hi, hello.
Thank you.
Good afternoon, everyone. Welcome to Istanbul Fintech Week. This has been quite a journey that months of planning have taken place to bring you all together with breakthrough talents, industrial leaders, and so on. But unfortunately, we experienced a terrible disaster during this process. As you all know, the 7.7 and 7.6 magnitude earthquakes have taken place on southern Turkey on 6th of February. We lost 50,000, more than 50,000 people, and some cities almost wiped from the map. Our sadness, as you can see, is undescribable, but our people actually showed a great example of solidarity. For this reason, I would like to thank you for all the local and international organizations, all the countries that supported us and share our pain. Coming back to Istanbul Fintech Week, over the course of the next few time, we will have great international and Turkish speakers. After they share their thought with us, you can directly ask them questions. Just raise your hand, it's enough. As for social media, please do not hesitate to use hashtag Istanbul Fintech Week, and please take Crypto Meta and BTC Haber on your posts and stories. So, let's get started. Let me introduce my guest to you. OK Group Global Government Relations Officer Tim Byun, EY Turkey Blockchain Desk Leader Esra Özdemir, and MasterCard Vice President of Crypto Investigations and Risk for CipherTrace, Pamela Clegg. Welcome again. It's really great pleasure for us to have you here. Let me sit and start the panel. I hope you all are okay. First of all, I would like to ask you that fintech actually is a great growing industry, and effect of blockchain on fintech and its growth cannot be denied. We all wonder about how is this effect expected in the future. We can start with Esra.
Sure. Actually, I'm a bit excited right now because this is a big one.
Me too, don't worry, me too.
So sorry for that, I just get choked a little bit. It's so honoring to be with these people over here, so big.
Sure.
Yeah, thank you. What I think about this is, yes, fintech is a growing industry, but we have so much way to go. It's still maybe almost just past the beginning right now. So the effect of blockchain on fintech will be marvelous, I believe, because it gives you being fast, being much more efficient, security. These are the main opportunities that blockchain gives you. So this will increase the already increasing and getting bigger the industry. It will rapid it. The increasing will be much more rapid with the integration of blockchain, and we already started to see a couple of examples, so much use cases about this, and I'm expecting much more as we find a problem in the ecosystem. Blockchain comes and mostly solves it. It kind of comes like this problem and the solution, problem and the solution. So it's getting bigger and bigger day by day, I believe.
Yeah. Can you add anything you want?
Yeah, absolutely.
I can ask you that this is already. Do you think the lack of regulation focusing on blockchain and crypto assets is hindering the development of the fintech and blockchain?
The lack of regulation, yeah, for sure. So I am coming from the United States, where I think you even referenced this morning, right, talking about kind of this regulatory arbitrage that's taking place. Look, developers, fintechs, FIs, anybody that's really in the space, they want to have clear lanes defined for them. And that's really where, when we understand what that regulation is and how it can affect us, then we're able to rise to the challenge and meet that regulation. But we have to have that clear definition. So really here, in Turkey specifically, we have draft regulation, and it's really about getting it right and making sure that there's room for innovation, but there's also a way that we protect our consumers within that regulatory environment as well. So really defining the regulation and not having just this unknown space is what I would say most, I don't want to speak for exchanges, but I would say that's what most exchanges and fintechs in this space really want to have, is that clear definition.
Yeah, I would like to also ask you that Turkey is one of the most prominent countries in the field of digital banking. How do we position ourselves when it comes to fintech and blockchain?
Whether it's a digital bank or a traditional bank, reality is exchanges like us, as well as all your crypto entrepreneur startups, we still need banking. We pay for rent, we pay salaries, and therefore, banking is a critical foundational service that we all need, not only individuals but businesses. And so with the advent of digital banks and entrepreneur or innovative banks right outside the door, I think it's a great time for us. Unfortunately, in the past month, we've had 3 of the biggest US crypto-friendly banks fail. And I think that's going to require some time of healing for the US ecosystem. These banks probably also banked global crypto companies, and therefore it's going to have to be rebuilt. For our group, we are working with new banks to solidify backup banks and contingency banks. But banking is still needed to interface with the traditional world. So as much as we like to say, we're going to go on Web 3.0, we're going to go into DeFi, there's still many interactions with the traditional banks, and that needs to be solidified.
Yeah, Pamela, I would like to continue with you. Actually, Esra talked about this a little bit, but we see that companies from many different sectors are taking steps in the field of blockchain. Not only infrastructure, but also the use of blockchain products are increasing. So what do you think about these developments?
Yeah, well, I think there's a very clear definition of this. MasterCard acquired CipherTrace over a year ago, right? So MasterCard has gone out and acquired a blockchain analytics firm because of this meshing between the traditional world and the crypto space, right? So, what we refer to as TradFi and then our DeFi space kind of coming together. Most users in crypto now, with the adoption of crypto kind of in a mass way, they don't natively earn crypto, right? So we still have this relationship, just as Tim said, between the traditional banking world and the crypto ecosystem. And that relationship is going to persist. So when we really look at, there's a lot of technology out there to safely bank crypto companies. There is data and crypto intelligence. We provide that to banks to safely allow your customers to engage with cryptocurrency exchanges. And then the other line of innovation that we really see are the banks then moving directly into the crypto space, either through custody themselves and taking custody for their customers, or actually partnering with somebody in the custody space or with an exchange and having kind of that vertical integration. So, identifying the risk, I think is, especially in our space, FTX hurt, right? We've had a lot of hurts recently. Celsius hurt. Some of the actions by the SEC and the CFTC hurt in the space. But we do have to remember that with the immense amount of innovation that we have with blockchain, we still have a human factor, right? And so the human factor takes a little bit to catch up to the blockchain innovation. And it's that human factor where we're actually going to find the risk and work out these kinks. We have 3 banks that failed. We had UBS for a separate issue, but that's the human factor that comes into play, right? The technology is there, the technology's solid. So how do we get ourselves up to speed? And I think this is also too, going back to my first question about regulation. Regulation takes a while as well, because that's human right? So applying these human aspects to a lot of the amazing innovations that we have with the technology, it takes partnerships and it takes working together, and I think that's why you see the big players in the space like MasterCard as well as the startups that are in the space, because we're all working together to make this innovation available to everybody in a safe way.
Yeah, thank you for this insight. I would like to also say that you will occasionally see a QR code on the screen during the conversation. When you scan this from your phones, we will have some NFT gifts for you. And please collect your questions. I will ask them directly. Esra, I would like to ask you that day by day, we see that many companies are making blockchain-focused promotions. So what issues are being consulted about? What is the most common problem you encounter with?
Well, actually, for this, since I'm from the audit background, mostly the question I answer is the regulation. You made a perfect introduction for that, actually. The question is always, when will be the regulation? How will be the regulation? What will be the tax? That's the main question. So for this, regarding regulation, we all know that there will be a regulation, but the timing is still a little bit unknown, but I believe it's coming and it's getting rapidly. Most of the regulator bodies are working on it. We know we every day see another news about this. The SEC and CFTC authorization fight is ongoing, so what to do with there, it's going to be clarified, how to classify these, all the crypto assets and everything. And also last week, for example, United States Treasury has released a report about DeFi, mainly focusing on DeFi and the AML for this DeFi. And bodies are working, and we know that they have a solid understanding right now, because a couple of years ago when we were talking about this, we knew that the bodies should train themselves and should much more learn about the technology. But today, we understand that they have, they studied their lessons, and now they are deeply talking about the technology and what should be coming with it. And the main focus is to, of course, protect the investors. So that should be the main focus. And if you do something wrong with over there, or something that would be scaring the investors off, then you won't have an ecosystem. So this takes time. You have to bit by bit work on it, see wherever it is touching, how the calculate the damage for that also. So for that reason, the regulation is coming, but it will take some time. That's the question that I get most, actually, for now. Yeah.
Tim, these incredible ladies are told about regulations. So I would like to ask you that from the perspective of blockchain and fintech, what is the biggest problem needs to be solved?
I think still today, the biggest problem to be solved is to really treat customers well, provide customers added value. And to be honest, I think that's going to change over time. When I entered the crypto industry in 2014, I joined BitPay right after Visa, the other credit card operator out there. And BitPay wanted to be the Bitcoin merchant processor of the world. They're still in business today, and I think doing well. But it just reminded me that I think still today, people want to save their Bitcoin, and they want to invest in digital assets. I think it's an alternative asset class. One day, I hope it's money, and I hope it's used to buy coffee, ice cream, small items, big items, but we're not there yet. And I think we need to remember that all the entrepreneurs out there, we need to remember that we need to serve customers. And so it depends on what customers want and need, and it's going to change. And by far, we don't have all the answers, but we want to survey and study the markets very closely. That's why as a centralized exchange, OKX also wants to be the portal to DeFi and help our customers have easy, safe access to DeFi. So it sounds like a conflicting story. Why would we want to be in the DeFi space as a CeFi exchange? But it's all about listening to customers and serving customers.
We talk about what people want, but actually I would like to ask you that what companies really want in that context.
What companies really want? Well, my background is as a former bank regulator. I think all crypto, another saying I have is if you're in the crypto business, you're in the AML business. You're in the compliance business. So what crypto companies want is regulator clarity. They want to know what the rules are so that they can abide by the rules. And I think that's still a very big principle today. And especially if I could just add 10 seconds to that. What we especially appreciate in the regulations is if there's a clear regulator. That sounds very obvious, but in the US, we have many regulators today. Even in the banking sector, I work for the Federal Reserve Bank and the FDIC, but you also have the OCC, and you have the NCUA if you're a credit union. So you have many bank regulators in the US. I think with new territories, it's great and refreshing to see one designated regulator that you can go to.
Yeah, thank you. Pamela, as a Vice President of Crypto Research and Risk for CipherTrace, does the increase in the blockchain products also increases in the risk?
Well, I think initially we do see an increase in risk, right? And I think but that's with any new technology. I think in the presentation before us, he referenced, the bridge exploits that we've definitely seen over the past year. That's because bridges are new, right? And again, it's humans writing code, and there are vulnerabilities in that code. It takes time, right? As we find one vulnerability and there's an exploit here, then we figure out what that vulnerability was, and we fix it the next time the next time we build a bridge, we build it better, we build it back stronger. Same thing with FTX, right? FTX has brought to light the issue of proof of reserves. And how are we going to solve proof of reserves? How are we going to be able to evaluate proof of reserves when we're looking at centralized exchanges, something like that? Like, are we going to, move towards some type of a zero-knowledge proof that we can actually check proof of reserves, every time we're engaging in some particular space with a particular entity or what have you? So that brings to light another risk, right? And so then it just takes time for us to get our heads around this and solve this. Same thing, we can go all the way back in the day, right, with Mt. Gox, when we had, multiple hacks of the exchange, right? It brought to light the issue of security at the exchanges, at the centralized exchanges. So yes, there are initially risks with any new technology, but again, there's so much innovation in the space and there's so much experience and thought leadership in the space that then we figure out a way to solve for that problem.
Yeah, would like to ask anything for Pamela's words? No, okay. Esra, what do you think is the worst feature that has affected the development of crypto money industry besides regulations? After the regulations problems has been solved, which framework we are gonna encounter with?
Actually, I think for the near future, when we look, the FTX was the biggest chopper for the growth of the business, actually. But I think it was a good case study for all of us because we learn from the mistakes. As you said, it's human factor. It's going to be always there, and there will always be a rotten apple in the basket. So we will always have to get rid of those rotten apples. But by that, when we see this obvious mistakes that has been done, we should take out our lessons over there. As an auditor, for example, FTX is a very fascinating case for me because it showed us all that the financials, the regulations, and the audit of these data is one of the most important aspects that should be walking together with this growth because if you have the non-organic growth over there, then you lose the control actually. And over there, if you have the correct mechanism to go through with that growth, then it comes in the right place and it comes in the line. So I think once we have the regulations, it will be much straightforward to go for them because you will know the path. So you don't have to try to find out where to go, what to do, because right now when you try to, for example, start an exchange even, let's talk about Turkey. When you want to start an exchange, there are some common paths that all the exchanges do, but there is nothing like a certain regulation that you should do this, you should do that, you are responsible of this. Any of these, there is not. We only have some couple of guidelines that we walk our way through by ourselves. So it's actually, everything is open to discussion over these. So we have to go through step by step. If we do the base on a good way, then the building will be better.
Yeah. By the way, when we said FTX, what kind of work is being done so that the events like FTX do not happen again in the future? Team.
You know, FTX, let me start off by saying FTX was not a AML or ATF or sanctions matter or concern, but that was the first focus for the crypto industry. FinCEN in the US came out with their convertible virtual currency guidance March 2013, already 10 years old. So while AML continues to be very important, the FTX debacle reminded us there's other disciplines that needs attention, such as custody of assets, you know, IT controls, standard internal controls such as segregation of duties. And so regulators learn from these debacles, and they supplement additional requirements. This morning I talked about VARA in Dubai releasing 300 pages of regulations. So it's getting more and more robust, more and more prescriptive, unfortunately. And so it's not just doing the right thing, but they're telling you very specifically what the regulated entities must do. So I think that's going to be more and more pronounced in other territories.
Yeah, Pamela would like to answer the same question.
Yeah, I think it's important to, again, FTX was not a failure of AML, anti-money laundering, or, you know, sanctions issues. If we looked at FTX even in October, right, they had strong KYC, know your customer. Their transaction monitoring was pretty decent. The risky transactions in and out of the exchange were fairly low. So it wasn't really an issue with compliance, as we've seen now. You know, Coinbase received their enforcement from NYDFS, New York Department of Financial Services. That was AML related, right? So we see the enforcements come out. We can see the regulators, they've been in the space with regard to AML for quite a while. It's the other aspects, again, going back to, as Tim said, you know, strong controls in other areas, management, you know, going back to the issue of proof of reserves, keeping all of that in mind. At some point, there's just straight fraud, right? There's just criminal activity that took place. But I feel like the AML infrastructure is pretty tight. It's a lot of the other kind of consumer protection issues that still need some more development. And again, it's going to be one of those things where we're going to have companies that just don't have good internal controls. They're not going to survive. You know, and you know, FTX was kind of a big explosion, but there are other companies that just kind of go away because they don't have those internal controls. And so we will get a thing where, you know, those will rise up to the top, and that only makes the industry stronger, right? So the exchanges that do take the right steps and do put in those internal controls, they're going to be the ones that survive. So it's really a question of survivability, and then it's also a question of, you know, we have to maintain these in order to maintain a banking relationship. So even though we are looking to regulators to really set the space for us, The banks, the traditional banks play a big role in the space because in order to get those banking relationships that Tim talks about, a lot of the banks will impose, hey, we want to see what your KYC procedures look like. We want to see what your AML program is like. And they'll ask for all of that information. So it's a little bit of self-regulation. And I think that's how some of these exchanges in non-regulated spaces have survived for so long, is because they self-imposed that kind of regulatory environment on themselves. And then they also did it to maintain those relationships with the traditional sector.
Yeah, thank you. Is there anyone who want to ask some questions? Our speakers, please raise your hands and we will give you microphone. No, okay, we are continuing. Pamela, I'm giving time for you. If something's happened like FTX again, you talk about the ideal perspective, but how we should react. But how the ecosystem reacts if anything happens like FTX again?
I think it reacts in the same way. Hold those accountable is step number one. Just because something may not be regulated wherever they are. I think you mentioned this morning, the Bahamas has taken a completely dramatic shift since FTX. That will probably drive away innovation in the space. It will definitely drive out other exchanges. There's a balancing act to be had there. But again, we're already working on solving those problems. There are already groups out there working on proof of reserves, having all of that on chain. How do we want to solve for that? So there's already solutions that are being kind of created. And I think that starts immediately. That's the beauty of the space, is that the innovation's so fast, right? Something happens, there's a bridge exploit, FTX crashes, Terra Luna depegging, whatever it is, that we tend to react really fast in the space.
Yeah, Esra, how do you see this case in the perspective as a EY blockchain desk leader?
Yeah. Actually, when I say this, I will look like a control freak, but it's just because of my occupation for many 15 years, actually. I always look at the FTX case in specifically. When I look at it from the audit perspective, it's horrible, I believe. I can't find any other word to say, because there is no control over there, no internal control, no regulative. I mean, all of us read in the newspapers and we see multi-million expenses saying, okay, with an emoji like this, and come on. So there was so many mistakes done over there, but as I said before, we have to be honest, this is new. All these exchanges are trying to find their ways, trying to find the right solutions to their problems, and within trying to get more customers, making profits. These are not NGOs, so they have to make profits too. So we should also keep that in mind. So for that reason, they have to balance this, and if they lose the balance, this happens. So this was a good lesson for all of us, and I believe that the ecosystem all learned their lesson, because we are all working on the internal audits and internal control procedures right now. There should be some manuals, maybe we will do those, I don't know, but there is so much question coming for these, and also too much development in all of the companies related with this sector, as we see. And by the time, I believe, when we see the problem and we find the solution for those, it will be increasing, and I believe it will be much more better, and FTX was a good lesson for all of us. And
yeah, it doesn't mean that all the cryptocurrency ecosystem gonna end in a night. It doesn't mean that. Yeah.
I don't believe in that, actually, so no, hopefully it won't. Let's say that.
Yeah, I'm gonna ask you again, is there any questions? Yes. Yes, start please.
My question for all speakers. We talk about regulations much, but do you think is it enough alone?
Yeah, start.
You mean
on regulations?
Is regulation enough by itself?
Yeah.
Of course not. It's just one aspect, but it affects actually all of the aspects within, because you have to. There are the compliance departments in all of the companies. Why? For the regulation, they have to be in line with it. And actually, the regulation touches all of the departments in a company. So it's not alone, not enough alone, but it should be there that the system works properly and healthy.
Yeah, Pamela?
Yeah, no, as I've already mentioned, that relationship between traditional finance and crypto, that is a strong driver in addition to regulation. So if we look at various regions in the world, for example, Latin America, there's only one country that actually has crypto regulation on the books in Latin America. But most of the exchanges in Latin America, you know, Mercado Bitcoin, Ripio, you know, BTEX, they've been around for quite a while, and they are pretty low risk as an exchange goes. A lot of that, again, goes back to them maintaining that relationship in the traditional finance sector. So in order for them to maintain the relationship with their banks, in order for them to have, say, a crypto card program with MasterCard, right? All these other relationships that start to grow within the sector and the partnerships that they work, there's due diligence that's applied through all of those partnerships as well. So now you have other sets of eyes taking a look at that exchange or that particular virtual asset service provider. So those partnerships also have a compliance aspect to them as well. So I think it's really kind of the more intertwined interconnectivity that we have in the space. That's where we also get that additional, you know, look that regulation alone can't provide us.
Yeah, Tim, wanna add some words?
Yeah, I think obviously the answer is no. Regulation in itself is not the sole answer. But what I want to highlight to your question and the real nature of that question is I think regulation is a reflection of society. So it's a society creation. It's created by the government, Congress, representatives. And therefore, there must have been some pain and some hurt, right, in the country. What's surprising is other countries have not passed regulations, and my team, our job is to actually monitor regulations throughout the world. And if we see a framework that pops up that we like, we study it more, and then eventually we'll go on site and talk to the regulators, talk to the politicians, talk to law enforcement, their respective FIUs. And if all three are actually supportive of a healthy crypto ecosystem, then we may decide to put in an office, seek a license. But ironically, sometimes we go in there and we find out that they're actually not welcoming. They don't want everyone to come. They already sometimes, unfortunately, have in mind these are the players that they want in, and oftentimes it's the incumbents. They're already there. So it is a reflection of society, and you know, we don't take it personally. If it's not ready, then we will pass. We will just block. That's one way to comply with regulations. So it's really a reflection of society. We're not lobbyists, and I think that's where you need sharp, good compliance teams, legal teams to help you navigate through regulations.
Tim, you said that regulations are reflects of the societies, but the concept is itself as an international concept. So how can we make the regulations international?
You know, it is an international concept phenomenon, but it's also differently applied. You know, so that's what I love about this industry and my specific job. It's never the same. So I think we should be excited about Turkey. I hear that they're going to come out with a regulation, but you don't know how heavy or light or how prescriptive or non-prescriptive it's going to be. And it's because it's reflective of the Turkish society, Turkish congressmen, congresswomen. And so each one is different, just like people, I think. So you really have to kind of respect what it is and do your best in complying with them.
Yeah, thank you. I saw some hands from over there for a question. Yeah, please, go ahead. No, yeah.
Hi, short question. Is going CBDC to replace what is better than crypto? Is CBDC a better alternative to crypto world? How do you see that? Thank you.
Is there any specific speakers that you ask?
Any of them, especially the MasterCard Vice President?
I'll take
anyone?
first stab at that. So just to be very clear, right, a central bank digital currency is centralized. It's in the name, right? It's right there in the name. So just to kind of break that down, it's also just a version of a digital asset. So it's not a crypto asset. It's actually not a virtual asset. It's actually a digital asset in and of itself. It is a representation of the nation's, whatever it is, national currency, their fiat. I think the issues with CBDCs that still have to be overcome include interoperability, right? I think also to the privacy issues. You know, the European Union has put out some very specific statements. Christine Lagarde has made some very specific statements about privacy and how we want to keep that intact. But we already know some pilot programs that are out there that do not take into account privacy. And again, they are highly centralized. I think it's also important to understand what is the underlying infrastructure for that CBDC. You know, yeah, there's Hyperledger Quorum that's out there, but not all CBDC research or pilots are even using distributed ledger technology. So it really depends. It's almost like the regulation issue, right? Like each one is kind of its own. So then how do we build that interoperability between all of these varied systems around the world? I do know, you know, we just had the conclusion of Project Icebreaker, which was Israel, Norway, and Sweden.
Sweden, yes.
Sweden, right? So, you know, they're looking at it, right? Again, here's this awesome technology. How do we make it work for us? And how do we make it better for the consumer? I think it goes back to Tim's point of what does the consumer actually need? What does the consumer actually want? I'll let you jump in.
So Tim, question is to you if the crypto world should be scared of CBDC or not. There are two different animals, two different instruments.
Yep.
How do you see that?
Yeah, I think they are very different, but I'm actually ecstatic and I'm hopeful that CBDCs launch. Because I actually think it's a great product for the government. You know, I think about our COVID stimulus checks that were sent out by the billions and trillions in the US, and it had so much fraud in it. And I think this is where if it was in the form of a CBDC, it could actually be researched and analyzed much better by the government. So I see it as a tool for fiscal policies. If you know, we talked about the natural disaster, unfortunate earthquake. I think CBDCs would be a great way to give out relief aid quickly, efficiently. And you know, you can't use CBDCs at you know, jewelry stores or movie theaters. You should be able to use it for, you know, groceries and to get aid immediately. So I think that's where I see some very exciting potential in CBDCs. But I don't see it as a threat or a substitute or a replacement for cryptocurrencies. Two different use cases.
Yeah.
All right, thank you.
Esra, do you add something? Agree?
I totally agree, and I don't have anything else to say for that. Thank you.
Okay. Anyone? Yes, please. The front side. Microphone is coming.
Well, obviously, most of us in this room, in this audience, would agree that fintech is a great way for financial inclusion, which, again, most of us would probably say that is to the benefit of the governments. And we also know that KYC, etc., is a operational cost to all the fintechs and all the exchanges, etc. Yet the government is expecting the private companies to do everything. Does it have to be a one-way street, or can the government do more to help private companies simplify, make life easier in terms of KYC, AML? Because at the end, it is to their interest as well. What are your foods for thought?
Are you asking for anyone special?
Right.
Okay.
Obviously, I think the government can do so much more. You know, who issues your passport, which is a major identification? It comes from the government. They have all your passport information. And with the technology today, via a API that is secure, that only gives kind of yes/no responses, private industry could benefit so much from using that, right? Just pinging the government. Or in the US, we have the DMV, who issues your driver's license. Somebody is issuing your driver's license. Obviously, they have all the genuine KYC information, probably the best information. If they could just allow an API with only yes/no pings, right? So much more can be done. And I think the government should charge, but charge 1 cent, 2 cents, something very reasonable, and they can still make money. I mean, think about that. If the government can make some money instead of lose money, I think it would be tremendous. So hopefully that can happen. You know.
I agree. I think, you know, put it on blockchain. Look, you don't have to put everyone's identity out there. It goes back to, it's a yes or no, or is it, you know, a ZPK, and, you know, I don't need to know who you are. I just need to know that someone has verified who you are, right? So I think that also then plays into, I mean, the whole construct of digital identity, and then how you can take that from one entity to the other entity. And then that also solves a lot of what Esra mentioned about the Treasury's issue with DeFi, right? When we read into how we want to play in the DeFi space. If I know that you have been KYC'd somewhere, then I'm okay allowing you to engage in my protocol, right? I just need to know that if something happens, if I do identify risky activity, then I am able to go to that entity and identify you as needed with the proper legal requests and everything else, right? So I think there's a lot that can be done. I think it requires, again, public-private innovation and really utilizing the technology that's out there to the benefit of, that benefits the consumer at the end of the day, right?
Also for Turkey, we can say that there has been some statements made by the government that blockchain will be emphasized, and they will be giving maybe incentives, something, but they are working on a regulation that is the ecosystem friendly, as they say. So we will see over there, and that's what actually we all work for. We are working in the regulation work groups for this reason, because we want the ecosystem over here to be bigger and friendly for all the players in it, and not only the investors or not only the exchanges, but everybody should be able to benefit from it, and everybody should be also benefiting, also should be protected. So this is what we are working for, and I believe that the upcoming regulation will be in this mindset, will be done with this mindset. So hopefully we'll see.
Yeah. Thank you for your interest. Do you have any questions?
I think there's still
Thank
one.
you.
Oh,
Yeah.
she's okay.
I would like to bring our attention back to innovation. Due to all the recent issues we're facing in the US, all the crypto, against all the policies against crypto industry, we are seeing Singapore is making some moves. So my question is, where do we think the innovation is heading to? Any of you can answer. Thank you.
As for US, maybe Pamela?
Yeah, it's not heading to the U.S. Look, we've already talked about VARA out of Dubai. I think that's great. I mean, as Tim said, having one regulator as your go-to person that simplifies a lot for the exchanges. Singapore, we've already seen, obviously, in Zug out of Switzerland. So I think there are a lot of spaces that encourage the innovation, and we definitely see the entities, whether they're DAOs, whether they're centralized exchanges, what have you, we see them gravitating to those places. Just in the United States, we had Bittrex and CEX.io announced that they are ceasing US dollar, US person operations, right? And again, it's this uncertainty of the regulatory environment that's leading to that.
Yeah. I think there is a good news. The good news is no one has a monopoly on innovation. And especially in the crypto ecosystem, it was born around, the white paper came out in 2009, 2008, but really the industries budded and grew from about 2013. And because coding and engineering technology is a worldwide phenomenon, right? It's not privy to just one country. It's a level playing field, and I think that's why you see the crypto industries budding almost everywhere, not only in one country, but in all countries you see it coming up. And so I think, in times of many crises like these, it's just more opportunity for other countries to get involved, other entrepreneurs anywhere else to get involved. So while it might not be the US, it just brings out opportunities elsewhere.
Esra, would like that?
I say, why don't they come to Turkey, actually? Because if it's not US, let's come back to Turkey,
Yeah.
I think.
That's right.
Because we're working on it, and I really, truly, from my heart, wish that Turkey would be one of the ecosystem hubs in the world, and we have that potential for both the coder part and for all of the aspects that we talk about. So why not? We can do this in Turkey, I believe.
So I can have one more question. Yes, please.
Hello, I'm following regulation news, and I want to ask about Turkey. What will be the situation in Turkey in a future crypto regulation? I want to ask for Esra Özdemir.
Yeah. In Turkey, the crypto regulation works are still ongoing, but there are a couple of main topics that, first of all, the custody and the exchanges regulation, and of course everybody asks, but it's taxing. But the main focus is on protecting the investors and also the custody part, and mainly this safety. I mean, for the exchanges, the proper controlling processes and how to do the auditing parts also. These are the topics that are being discussed in the regulatory board right now. We have come so far a good way, I believe. But as it's the election season now, nobody's first priority is the crypto regulation right now, but it's one of the main topics over there. But I am expecting a rapid increase in working and an upcoming regulation after the election, because this is one of the priorities for both all of the competing parties for the regulation. As you see in all of the news, everybody is talking about we're going to make the crypto regulation. So this will come, and so far so good. We're, I think, in a good position right now regarding the regulation.
Thank you for your answer.
Yeah, would like to add something? Okay. My friends told me that I have few time, so I can have one more question. Yes, please, go ahead.
Yes, thank you. I have one more regulation question. Sorry for that. For Tim. Tim, I got it. You saying we user friendly. We care so much consumer user. Yeah, that's right. But I think in the world, whole world, we have many consumer, but we don't have enough producer, I think, in this ecosystem, blockchain ecosystem. But my question is, do you think should regulation come for user-friendly if they like that? Do you think blockchain, Bitcoin, cryptocurrency will lose their vision? What do you think about like how regulation should come?
Oh, great question. You know, as a former regulator, I don't just wish that there's regulation. That can be harmful in itself. And I really respect countries that have taken a little more of a wait and see approach. Because when you wait and see, you often get criticized. Like, what are you doing? Why are you so slow? You're not doing anything. And so the politicians get hammered, and it's not easy, right? So I actually think it's easier for a country to hurry up and pass a regulation, make it tough, but on the flip side of that is it actually hurts the consumer. It hurts the ecosystem. So there's a fine balance. And I think as crypto enthusiasts, as a customer also, that's what you want. You want a balanced regulation. There is an unfortunate story to that right now. And I think I see it in our company where we spend so much money on compliance, legal, that I can't imagine how a small startup is going to start today. Because it's so expensive if you're entering a regulated space. If you're entering a non-regulated space, maybe you do advertising or referral business or something, I think it's easier. But if you're going to run an exchange and obviously it's regulated, very, very tough to start. So that's the downside of it's actually being a barrier to entry. So, you know, those are some of the issues I see.
And also, isn't it like a chicken egg problem actually? Because, you know, some want the regulation to come fast forward, but the technology always comes first. The regulation always comes afterwards because they have to first understand what's going on, and then they can do something to regulate it. You have to know what you're regulating. So if it was a rapid regulation, I think it would have been hurtful. Everybody would be hurt so much, I believe. So instead of protection and whatever is your mindset, you will be acting just the vice versa. But if you don't act fast enough, then you will be much more behind and you cannot keep up with the technology. So it's like a chicken egg problem. It always has to refresh itself. So you cannot say in any of the regulations, you have to do this way and there's no other way. You cannot do that. You have to just maintain the framework maybe, and then you will be filling inside or just changing the framework, the color of the framework, etc., according to the technology's development. So it's going to be just like a living procedure all the time. It's not going to be just one regulation and that's it, and end of story. It will never be like that.
Yeah, so true.
Yeah.
Thank you for sharing your thought with us. OK Group Global Government Relations Officer Tim Byun, EY Turkey Blockchain Desk Leader Esra Özdemir, and MasterCard Vice President of Crypto Investigations and Risk for CipherTrace, Pamela Clegg. Thank you so much for having us here. Let's give them a huge applause. Thank you so much for you also, and I'd like to remind you that please use the hashtag of Istanbul Fintech Week, and please take Crypto Meda BTC Haber on your stories and your posts. Thank you.